Hey, real estate investors. My name is Sarah Bratcher. I am a CPA who specializes in financial accounting, specifically bookkeeping for real estate investors. It's my passion. I've been in the industry, the accounting industry for 20 years, real estate investing for at least 11, maybe 12 years now. And it's just where I've always thrived, and I love helping people get their books in order. So today I wanted to help those of you who have been procrastinating getting their books together for their tax preparer, or if you're doing your books yourself to finish your taxes up. This will air in August, and we are coming up on the tax return extension deadlines. If you have an LLC or a business, an S Corp, those are due, the extension from that is due September 15th. And if it's a sole proprietorship on your individual tax return, it's due with your individual tax return on October 15th. So those of you that filed the extension saying, oh, I've got all this time to get all my books together, this is for you. Or if you just want to get it done before the end of the year, so you'll have it ready January 1st when that December bank statement comes out, you can reconcile it and get it over to your tax preparer and be done with it. If you want to just catch up on that. Anyone in between. So the quickest way to get your books in order in 7 days, there's a lot of discussion on what software to use. QuickBooks Online is just the most convenient for real estate investors because of the reporting factor, especially if you're a smaller real estate investor. And I do recommend the higher one with the classes when you get a larger portfolio and you need to break down your properties a little bit more. But here's a hot tip. You can buy the QuickBooks Simple Start. I think I'll put a link in the caption for a discount off on it. I think it's $30 regularly, and then I have a little discount on top of that I can pass on to you. Do that, I think, and just quickly get this done, and it's not going to break the bank. And you can use customers for your property. So if you have 123 Main Street and 456 C Street, just enter them as customers. And when you go to enter your expenses in your income, just add a customer in that section, and then you can pull a report, profit and loss by customers, and your tax preparer can see each property that way. Just a hot tip, so you're not, I think it's up to like $90 now for the one that has the classes and the business structures that you will need because you've got goals and you're going to grow and everything, and you'll eventually get there. But that's a simple way to start out with QuickBooks and grow up into where we can have the classes separated. So that being said, so 7 days to get your books in order. I've got it broken down for you. Day 1, you're going to download the QuickBooks, the Simple Start. Get it all done. Connect your bank accounts and all your credit cards and everything. And then you're going to upload the chart of accounts that you can email me, Sarah at reiaccountingsolutions.com. I will have that in the caption as well. Email me and I will send you my quick little chart of accounts to upload into QuickBooks and get you all set up. And I'm going to go through that chart of accounts right now because I think one of the biggest barriers in getting all this coded is just the mental block of, where does this go? What is this? Oh, this was at Home Depot, but I can't remember what house it was on. And this was from Home Depot, but I don't know if it's a repair or a maintenance. You can do simple things like combine your repair and maintenance category if you're stuck that far. The IRS doesn't need that much detail between repair and maintenance. You can talk to your tax preparer to get specifics on what you personally need separated out, but it's usually just like insurance and taxes and stuff like that. Everything else is just for you. It's not for the IRS. And your tax preparer can help you if there or larger categories you need to break out. But anyways, I'm going to go over my simple chart of accounts right now that will help you make quick decisions and fly through your coding your or categorizing your bank transactions so you can get this done in less than 7 days, hopefully. So day one, I'm going to recap. Day one, we're going to download the Simple Start QuickBooks, and we're going to connect all of our bank accounts through that. And then we're going to upload this chart of accounts that I am going to go over with you and quickly just kind of explain things. You can always email me for questions about it too. So the first one we have is an operating account. That's going to be your operating check. It's going to be your main checking account that most of your transactions are going to go through. And I do have the comments explanation over here. Make sure you do not upload that column E to your QuickBooks because or I guess there might be a spot for a description on there if that helps you. But refer back to this if possible. And this does not have to stay named operating account. You can name it Chase Bank dash and the last 4 digits of your Chase Bank account number. I just like to categorize it like this as the main operating account that most expenses come out. And the next one we have a trust account. Again, it doesn't have to be called trust account. It could be Chase 123, whatever account name that you immediately say and like, oh, that's that one. Because this is for you. We want you to be able to code this quickly. So get that in there. And the trust account, that is the one where you keep your security deposits. This should be a non-interest bearing account because most state real estate commissions require security deposits to be kept in non-interest bearing accounts. And you'll see the contra account to this later down here for the security deposit liability. But if you've ever gotten that dreaded real estate commission security deposit audit, if you keep your trust account and your security deposit account clean every month, you can fly through that audit in less than 10 minutes, print out a couple of reports, and have it done. Just a quick tip there too. So keep those all separate. And then I usually like to have like some kind of reserve account, and some people have multiple accounts. They do kind of a profit first type thing where they have a savings account for this and a savings account for that, and you can put as many on there. But I just put the 3 main that I mostly see, the 3 main checking accounts here: your operating, your trust, and your reserve account. And that's usually a savings. And when you spend money from your reserve, say you have an HVAC unit go out, and you need to spend, $15,000 to replace it, whatever it costs in your area, you would transfer this from your reserve account to your operating account and expense it from there. Just to keep things cleaner. Accounts receivable, it's always going to stay in QuickBooks, whether you use cash basis or accrual basis. And you probably won't use this much unless you actually invoice your tenants. But if you use another platform like Avail to collect your rents, then you don't need this at all. And these are all assets on the balance sheet. I'll have another video later that breaks down the balance sheet and the profit and loss and why these are all separate. But we're just going to quickly get you through, 7 days of getting this classed and categorized so you can finish this up. This asset is work in progress. This is for any rehabs or flips you are currently working on. This is going to be your original purchase, land, building, and closing cost. If you are entering the statement in there, most likely you'll probably just send that to your tax preparer and you won't have to enter those separately. But I do want to talk about this one, rehab and construction cost. Most people put the rehab and construction cost on the profit and loss, and which is fine if your project starts in March and ends in August. Then it's all within the same year on the profit and loss. What happens is when you start in October and you end in February, we need those expenses in the same year. So it's better to put those in an asset, the rehab construction cost over here for the new expenses that you're rehabbing on the flip or the rehab. Your earnest money deposits, when you pay that money to acquire a new property, your earnest money goes into this asset account until it actually closes, because we all know that something could happen. You may not actually buy that property. You may get it back, and then you'd code the deposit back to this one. Your tax and insurance escrow, this is on your mortgage payments. If your mortgage payment is $1,000, you're going to have, not all the time, if you have your taxes and insurance escrowed, you're going to have part of that is taxes and insurance and principal and interest, and you'll break those down and categorize those accordingly. And then uncategorized asset, if you're not sure what to do, put it to uncategorized asset, or just I have an uncategorized, needs more research in the on the profit and loss. So one of those two. Undeposited funds, this is for accrual-based companies, and QuickBooks always has this on there, so you don't do it. And your long-term investments, this will be where all your fixed assets go. And I have this right here. Use the appraisal cost segregation. If you purchase properties during the year, if you hire me for my services, I will get your financials looking like this. But if you're just needing your profit and loss screwed up for your tax preparer, then you probably don't need to be spending much time on these unless you have improvements. Then you throw the improvements into the asset there. Like if you've had a long-term rental for many years and you use some of that reserve money up there to, replace the HVAC, then it's expensive enough that you can do it improvements and depreciate it and keep that as, for your cost basis. Accounts payable, again, this is accrual-based accounting, not cash basis when you enter a bill. And then your credit cards, this is where you will connect. When you connect your credit card to QuickBooks, it will automatically be here, and it'll be the name of your actual credit card, and there'll be as many as you have. If you have one credit card, you'll have one line here. If you have three, you'll have 3 lines here. Your line of credit, if you have a line of credit for some of your properties and stuff, you'll have each one of these for each line. And then here's your security deposit liability. So if your tenant pays $1,000 in security deposits, you will keep this in this liability account until they move out. And when they move out, you will do one of two things. You will either refund it back to them, or you will move it to your profit and loss and count it as income towards damages. We'll get to that here in just a minute. And then your mortgages here go here on the balance sheet. Owner's contributions, distributions. If you have a lot of, purchase a lot of investments this year, and you have to put a lot of personal money in to make those, you put that there. Or if you have excess cash flow this year and you want to pull it out to fund your lifestyle, this is the bucket it goes into, to make sure it doesn't hit your profit and loss as income or expense, because that's probably one of the biggest things I see is people put contribution distributions on their profit and loss, and it affects their tax return. When you're an LLC, it doesn't. Again, check with your tax preparer. Most of you are starting out as an LLC or a sole proprietorship. If you become an S Corp, it changes the game completely. You don't have owner's contributions or distributions. You have to do loans. Check with your tax preparer on that. Or you can email me and I can help you figure out what situation you're in and what you need to do. All right, down to the profit and loss. This is where I want to keep it super simple. Don't overcomplicate this. Just get things coded quickly where they need to be. Interest, income. I feel these are really self-explanatory, but if you have any questions on them, again, email me, Sarah at reiaccountingsolutions.com. SARAH is how you spell Sarah. So your interest income on bank accounts that you have, your late fees or any other fees you charge the tenant, and then your rental income, your security deposit withholdings. That is where when they move out and you use their withholdings to pay for the damages, you move it from that security deposit liability over to income, and then your expenses will be down in repairs and maintenance. Advertising and marketing. This could be things like hospitable if you have a short-term rental, stuff like that. bank charges and fees. It's pretty self-explanatory. Education. This is a big one for real estate investors. We love our masterminds, our courses, our conferences. We love them. Separate them out into education so we know what that is. Insurance, big bucket for all your insurance, your interest paid on mortgages, credit cards, any loans, whatever. Hopefully you don't have any interest on credit cards, but it happens. I understand. Legal and professional services, anything you outsource to a professional, lawyers, accountants. You could put cleaning under here, and I notice I don't have cleaning on here. It changes with everybody. A lot of people, have long-term rentals right now, and they don't really have a lot of cleaning fees. But if you have short-term rentals, you might want to break that down and add that in there, and you can easily do that. Maintenance and repair. A lot of people get tripped up on this too. Maintenance, I like to think of it's an ordinary maintenance item, something you expect when you buy a car. You're going to have to get an oil change every, I think it's 5,000 miles now, 10,000. I don't know what it is, but you're going to have to get an oil change every so often. That is a maintenance item. You're going to have to get gas. You're going to have to, gas goes into a gas bucket, but maintenance is just expense you're going to have to incur. Maintenance is air filters. You're going to have to change air filters in an HVAC system. Maintenance it could be lawn care. You could also do lawn care as a separate line item if you want to track that. Doesn't matter, but just get it in a bucket quickly that you know and like. But maintenance is just something you're going to have an expense for. If you have a fireplace, you need to get a chimney sweep every year. And in the colder climates, you're going to do snow shoveling. That's maintenance. That's to keep your property in tip-top shape and keep the value up. Meals and entertainment for when you're traveling and doing all that. Or if you're taking a real estate agent out to eat, to discuss stuff, make sure you keep your receipt on that. Office supplies and software, pretty self-explanatory. Other business expenses, this is just a random catch-all because we have all this stuff all over the place. Rent and lease is for you to operate your business. If you are leasing an office space, a lot of people like to use the Augusta rule. And if you want to pay yourself for, renting a space in your home, you have one business meeting a month. There's lots of different things you could do for that. That might be overcomplicating it right now. But if you do rent or lease any properties to run your business, put it in here. Repairs, I look at this as we go back to the ordinary and necessary. Repairs are more like somebody threw a ball through the window and nobody's claim. Maybe it's a vacant house and you have to repair it, or you repair it and then you charge it to the tenant. So then you'll do for the late fees and other income up at the top. Subscriptions, that's for stuff like QBO. Rent Ready, Tenant Tracker, whatever they have, Avail, whatever they have out there right now. Taxes and license, put all taxes in here, property tax, everything. Travel, this is for when you travel for, to go look at your properties. If you don't live near them or anything and you need to go travel to them, put all that in there. Unapplied cash bill payment expense. This is something QBO has in there. Don't use it. They just leave it there. Uncategorized need to research. This is a hot used one, especially to get your books cleaned up in 7 days. I want you to go quickly. I don't want you to get stopped. I want you to see everything quickly. And if you don't, within 5 seconds, you don't recognize what that is, throw it in this. And on day 6, we're going to go through this category and we're going to spend some time and figure out what those odd expenses were. Utilities, that's pretty self-explanatory. And then after your tax return is finalized, your tax preparer will give you adjusting journal entries, and you'll put that in there if you're going to keep that track of that. So yeah, that's a quick overview of the Master COA chart of accounts. So day 1, remember, we're going to download QuickBooks. Simple start. We're going to upload this chart of accounts. and we're going to connect all your bank accounts and credit cards, and that's it. Take a break on day 1. You've done more than you have in the past year, and I'm proud of you. Let's start moving forward. Day 2 through 5, I'm going to do this really quickly. You are going to go through 2 months at a time. Don't take it small. Go through January and February of last year and just get stuff coded as quick as you can. Hopefully it only takes you 15-20 minutes and you can just get done and get it over with. So on day 2, you're going to go through 2 months. Day 3, you're going to go through 2 months, and just do that. Take small little chunks, 15-20 minutes. We can dedicate that much time. And then on day 6, you're going to go through all your uncategorized accounts and put everything it needs to be, get that all tied up and beautiful, and put all your memos in there. And then on day 7, you're going to go through and use the reconcile function on QuickBooks. And QuickBooks has a good tutorial to show you how to do that. But if you have any questions, you can always book a call with me, and I can help walk you through that as well. You're going to reconcile all your bank accounts and look it over. Make sure it doesn't look weird that your profit is $10 million and you didn't accidentally, add several zeros to something. That, passes the kind of common sense test. If your profit's, in line with what you had in your mind, or it does look like it really is, then go ahead and send it off to your tax preparer, your CPA, and you are done. And that's all I have for now. So if you have any questions, you can comment on this YouTube channel, or you can email me, and I would be happy to discuss anything. Well, I'll put my link for a consultation in this caption as well. If you need to book a call, we can chat about it and see where you're at in your bookkeeping, see what you need. If you're ready to outsource it, we can look at that too. I do provide those services. I can provide some startup services too if you're just looking to get started on it, and then you can take it over. I do that as well. So anyways, just reach out if you have any questions at all. We will talk to you later. Thanks so much for watching. Bye.